One of the best strategies to minimize taxes on appreciated cryptocurrency is to donate that crypto to a charity or a nonprofit. In this video, I'm going to discuss the basics of why donating crypto to a charity or a nonprofit might be a beneficial tax strategy, as well as why we can even take it a step further and form a nonprofit or a private foundation in order to receive that cryptocurrency that you're going to donate. So to begin, why might you want to donate crypto instead of just donating cash? Well, if you're donating cash, especially if you begin with cryptocurrency, you typically need to sell that crypto. And so say you're sitting on right now appreciated cryptocurrency. You have Bitcoin that maybe you bought at $10,000 and today it's at $50,000. Well, if you sell that crypto and receive cash to then donate to a charity, you'll have a capital gain. You'll have a tax on the difference between the original $10,000 paid and the value today. And so if it's appreciated, and many people now do in fact have gains, appreciation, because the market is increasing, you'll have a capital gain that you'll owe tax on, but then you'll also have a deduction for that donation to a charity. And that's because certain charities or nonprofits are eligible for itemized deductions on your tax returns. And itemized deductions are quite valuable and beneficial. You have to itemize on your taxes rather than taking the standard deduction. But if you itemize, then taking this deduction can greatly reduce your adjusted gross income and as a result, the taxes that you pay. So having donations, great way to reduce your income. Now, in the case of cryptocurrency, we talked about how if you sold that crypto for cash and then donated that cash, you'd have a capital gain first, assuming it's appreciated crypto, but then you'll also have that deduction. And while they don't necessarily cancel each other out, you do have a benefit and then you have the negative of the tax due on capital gains. And so a way around this, or actually a benefit that Congress has allowed for quite some time, is that if you donate appreciated property, things like stocks, for instance, you can take a deduction for the value of that property without actually having to take a tax on the capital gains. And so in the case of cryptocurrency, people now for years have been donating crypto to nonprofits and charities and taking a deduction for the fair market value of what they donated. The IRS recently, however, has said, well, if you're going to donate crypto to a charity or a nonprofit and take a deduction, you need to have what's called a qualified appraisal. And so a qualified appraisal is, as the name suggests, an appraisal conducted by a qualified third party who can value the crypto. And many of us thought that this is almost illogical if we're talking about a crypto that is commonly traded, something like Bitcoin or Ethereum, or even many other tokens that there's a market for and you can find the price. Nevertheless, the IRS has still said that you need to get a qualified appraisal, find out how much that crypto is worth at the time of donation. But as long as you comply with the requirements, then you can take a deduction for that appraised value without having the capital gain. Of course, though, it's important that the nonprofit actually receives crypto, not cash. And that means that they have to be set up to do so. And not all nonprofits or charities are. And so if you're looking to take advantage of this, you definitely need to do your research and make sure that the place that you're trying to donate to can in fact accept the crypto. And also make sure that you have a qualified appraisal lined up as well, because it would be a shame to make the donation but not be able to actually take the tax deduction. Of course, you'll have the charitable benefit, but the taxes will definitely suffer. So that's definitely a strategy that some of the wealthy people out there take, but you can use it as well. You don't have to be in the top tax bracket to benefit from that strategy. But let's take it even a step further. Let's talk about how even the ultra rich and ultra wealthy use charitable deductions in order to reduce taxes while also providing additional benefit. And that's by creating your own charity, foundation, or nonprofit. And while I'm using all of these different names, it's important to know that they are all different. And for example, a private foundation has differences from public. It depends on the type and the amount of donations that you can receive from people outside of the charity or not, versus, for example, just a wealthy individual who self-funds a charity. That's generally a private type rather than public. Now, the downsides of that, and the reason why the nuances between these different types are important, is you're limited in the amount, or the maximum amount of a deduction you can take during each year on your taxes. If you're donating to a public type of charity, you generally have a much higher amount that you could offset your taxes than a private type. And so, where possible, it's beneficial to donate, especially if you're trying to offset large amounts of your income, to public charities rather than private foundations. So speak to an attorney or speak to a tax professional if you're considering making or setting up one of these different types of entities, because there are differences. But one of the important things to know is that not only would you have the benefit of being able to take the deduction by funding it yourself, but you'll also be able to design what that charitable purpose is. But you do need a charitable purpose, and that's rule number one. Sometimes we have people call us and say, hey, I want to set up a charity so I can take these deductions, but I just want to be able to pay myself or have other benefits. It needs to have a charitable purpose. You need to be seeking to do something that falls under the IRS rules and requirements in order to be a nonprofit or a charity. So if you're just trying to identify this as a way to offset your taxes by making a donation but then somehow pay yourself, it doesn't really work that way. You still, at the end of the day, will be spending the money towards a charitable purpose. And so if you're listening to this and you're thinking to yourself, well, I do want to do some good. I have this idea in mind of something that I do want to do, and I'd like to fund it, and I have crypto that's appreciated. This might be a perfect fit for you. But if you're not in that segment, you might want to just explore making a donation to a pre-existing charity or foundation. But at the end of the day, in doing so, you are going to be getting rid of that crypto. You are going to get a tax deduction, yes. But one of the things that the videos out there don't often mention is that the net effect is that you still don't have that crypto, the cash, or the asset that you're donating. And so at the end of the day, you really do need to have a charitable intent. While there is going to be a tax deduction, let's say you donate $100,000 of value and the tax deduction is of value $30,000. Your net effect is you're still getting rid of $70,000 of value. So you need to make sure that this fits within your overall goals, not just because it's something that you hear on YouTube or TikTok that sounds like a good way to have a tax deduction. Talk to a tax professional, reach out to a firm like ours, or someone that is versed not only in crypto, but taxes as well. If this video has been helpful for you, please like it and share it with a friend. Thank you very much.